This video is all about RRSPs and what happens when you turn 71, so let's take a look at what it means to convert your RRSP to a RRIF. You've been using the RRSP to help save for your retirement, but eventually the day will come when you're going to start withdrawing, either because you need to or you've reached the age that you have to. And that's because eventually your RRSP has to be converted into either an annuity or a RRIF. For the purpose of this video, we're only going to be focusing on RRIF accounts. The term RRIF stands for Registered Retirement Income Fund. If you're dealing with an investment advisor, then you probably heard them say your RRSP must be converted to a RRIF when you turn 71. And basically what that means is that all of the investments inside of your RRSP are transferred to a brand new account called a RRIF account. And that's done by December 31st of the year that you turn 71. So what exactly is a RRIF and how is it different from an RRSP account? Let's get started. To compare the two accounts, RRSPs allow you to make deposits until the end of the year that you're 71, and those deposits are going to get you a tax deduction. As well, there's a lot of flexibility surrounding those deposits and your withdrawals. You can take out money whenever you like and as much as you like, as long as you're aware it's going to be added to your taxable income. And deposits can be made whenever you like, as long as you stay within your limits. You've now reached the age that your RRSP must be converted to a RRIF account. The main difference is you can no longer make deposits, you can only take out money. Every single dollar that comes out of the account will be added to your taxable income. And even if you don't need the money, you still have to take out money every single year based on certain minimums dictated by CRA. So what do those minimums look like? The amount that you must take out is based on your age. So this graph summarizes every single year what you must take out based on how old you are. You can actually convert your account to a RRIF prior to 71. If you had done that in this case, then at the age of 65, you would have had to withdraw 4% before the end of the year, and that's 4% of the balance of your account. You'll notice every single year the percentage goes up until the age of 95, where it stays at 20% for that year and every year after until the account is finally depleted. If you have a spousal RRSP, the same rules still apply when you convert it to a RRIF account. The good news is if your spouse made a deposit either this year that you're converting it or the 2 previous calendar years, those minimum withdrawals coming out of the account will not be added to their taxable income. However, if they made a deposit and you're going to take out in excess of what the minimums are, then the difference will be attributed back to them. So how do these minimum payments actually work? Well, in this case, you turned 71 in November of 2018, which means by the end of that year, you have to convert your RRSP to a RRIF account. Now, if you want, you can take out money in 2018, but the minimum required payments don't actually start until the following year, in this case, 2019. So January 1st, 2019 rolls around and your account is worth $250,000 and you're still 71. Those are the 2 most important pieces of information that are going to determine what your minimum payment is. Based on you being 71, the percentage that you have to withdraw is 5.26%, and that'll be based on your account balance of January 1st, $250,000. Now, when you set up your account, you requested annual minimum payments, and those were to start in February of 2019. So $250,000 multiplied by 5.26% is $13,150. That is the amount that will be withdrawn from your account on February 1st of 2019, and 100% of that withdrawal will be added to your taxable income for the 2019 tax year. Here's a couple of key points to remember. If it makes sense, you can convert your RRSP to a RRIF account prior to turning 71. When you set up the account, you'll determine the frequency and the amount of the payment, as long as you're always taking out the minimum. Every single dollar that comes out of the account will be added to your taxable income for that year. Now, if you're only making minimum withdrawals, they don't typically withhold tax, so keep that in mind if taxation is normally an issue. And finally, beneficiaries will not transfer automatically from your RRSP to your RRIF account. You need to make sure you designate them when you set up your new account. This wraps up our video on RRIF accounts. The Independent Dollar is all about making personal finance easy, so if you have a suggestion for a topic, please let us know by commenting below. And as well, if this is your first time to our channel, click here so you don't miss any future videos. Thanks for watching.